All right, let's just dive right into this. If you run a fitness business, tax season probably feels like, well, a massive heavy weight that you really didn't sign up to lift. So today, in this rapid fire explainer, we're breaking down a super simple 7-step guide. It's designed specifically to take all that pressure off your shoulders so you can actually get back to doing what you love, building your community.
I mean, check this out. According to the U.S. Small Business Administration, small businesses spend a massive 120 hours a year just handling federal tax compliance. Seriously, 120 hours. That is quite literally weeks of time lost to paperwork, time that absolutely should be spent on your clients, your gym, and growing your brand, right? So how do we actually get that time back? Let's build a solid foundation with our first 3 steps. Step 1, understand your tax rules. Step 2, track your income streams, meaning you need a reliable digital system to automatically wrangle all those memberships, class bookings, and merch. And step 3, separate your expenses.
Let's actually double-click on step 1 for a second, because there is a major trap hiding here. If you're a solo personal trainer or, say, an independent studio owner, you are generally on the hook for a 15.3% self-employment tax, and that's just to cover Social Security and Medicare. Knowing about the specific obligation early, man, it totally prevents a completely nasty surprise when tax time actually rolls around. And circling back to step 3, we really need to talk about the danger of mixed finances. Look, when you're just starting out, it's super easy to just swipe your personal card, right? But mixing personal and business purchases, it just creates absolute chaos later on. Opening up a dedicated business bank account gives you total clarity and, more importantly, real legal safety. Okay, let's keep this momentum going with the second phase of our system, which is all about keeping way more of your hard-earned money and keeping the IRS happy. Step 4 is claiming your deductions. Step 5 is managing payroll. And step 6 is organizing your records. So, rapid fire through step 4, claiming deductions. You've got to remember that literally everything from buying that new treadmill and paying facility rent to your software subscriptions, your trainer wages, and even your social media ads, all of that can lower your taxable income. But there's a catch. You have to consistently track them throughout the entire year.
Now, on to step 5, and you absolutely must pay attention here. It's the whole employee versus independent contractor classification issue. Whether we're talking about your front desk staff or your class instructors, you literally have to get this classification right. Mixing up who is an employee and who is a contractor, yeah, that can lead to severe legal penalties and just massive, massive tax headaches.
For step 6, organization, I just want you to remember one single number: 3. The Small Business Administration's general rule of thumb is that you should always, always keep your organized business tax records for at least 3 years. No exceptions. And finally, we cross the finish line with step 7. Work with a tax pro or use dedicated gym accounting software. Honestly, just handing the numbers off to a professional platform or a real accountant drastically reduces filing errors and penalties. It's a real game changer because it takes the guesswork completely out of the equation. So all of this brings us to one final big question. Are you ready for tax season? I really challenge you to implement these 7 steps right now. If you get your finances structured and just clear out all that clutter today, you can get right back to what actually matters most: building your amazing fitness community. Take these steps and let's get you set up for success.